Fabio is the community manager at Cake DeFi. Cake DeFi, and he will discuss current market conditions and how to secure cash flow on your crypto. So go ahead, Fabio.
Hey, Joe, thanks for having me. Thanks for the invitation. Yeah, let me briefly touch on maybe my work in the space and what I'm doing. As you said correctly, my name is actually Italian. Grew up in Switzerland, currently living in the Netherlands. And I joined the crypto space in around 2015, full-time working in it since the end of 19, beginning of 20. And I do community management, social, a little bit of marketing in Cake DeFi, and I'm an active contributor in an open source community project called DeFiChain. And maybe to give you a little bit of a connection, why is this connected to Binance and how is it connected to Binance? Both projects actually are currently implementing a Binance Smart Chain integration because both Cake and DeFiChain, they feel currently the Ethereum network is, in my opinion, a little bit unusable just due to high fees, and nobody wants to pay $90 US for a transaction. So, and Binance actually solves this quite elegant and quite cheap, quite fast. Everybody's on Binance, everybody knows Binance. So we're currently integrating Binance Smart Chain on both Cake DeFi and DeFiChain. So to briefly give you a rundown, I don't want to show the project here, but just to give you a little bit of an overview, what is it actually, what does the company do? You can compare it maybe to the biggest players in the space that do a little bit of the same what Cake is doing. I'm sure you guys know BlockFi, Celsius, Nexo, Ledn, or any other of these lending services, where you practically you take your assets you have, maybe you have some Bitcoin, maybe you have some ETH, maybe you have a stable coin like USDC or USDT, and you're planning on holding on to this currency for a while. So you have several opportunities. What can you do? You can leave it on an exchange. You can put it on a hardware wallet, on a ledger, but you can also let those cryptos work for you to generate some yield. And there is several opportunities in the market. So you can lend them. So it means you give your cryptocurrencies. I think Binance offers a small yield on this. Other platforms like BlockFi, Celsius, or Nexo, or Cake, they offer you in between around from 0.1% up to 6% yield on your currency, just to give it to them and hold it there for a while. And this can actually make a big difference. You can compare that a little bit to what was happening in the banking industry 10, 15 years ago. It's not true anymore. Like if you hold your money on a bank account, you're practically getting nothing. And if you have a lot of money, you even pay for it for your money to be there. So in the crypto space, this is very different. People appreciate if you hold their assets with them. And Cake does as well. We're one of the fastest growing startups in the Asian markets. So we're based in Singapore, and it's the difference, I guess, between the bigger players in the space like BlockFi or Celsius is we kind of see us as this interface between CeFi, centralized finance. So this is your bank, this is your big exchange where you do KYC, you apply for the process, and you can buy cryptocurrencies, sell cryptocurrencies, or use different products, but in a centralized way with a company that is regulated. And we are the same. We are also a centralized regulated company in Singapore. But we try to give our users access to decentralized products. Like, what is DeFi? What are decentralized products? These are things like loans. These are things like staking, liquidity mining, yield farming, and this is very deep. There's a lots to learn, and most people actually it's far too complicated and far too technical for them to get a hands-on experience, because you need to manage your own keys, you need to update your wallets, you need to stay on top of it, you need to understand difficult concepts like impermanent loss, and you are solely responsible for everything you do. So there is no customer service, nobody that can help you. If you, sorry for my wording, if you fuck it up, it's gone. Meaning you really need to know what you're doing. And there is this this intersection between CeFi and DeFi. So where you have access to decentralized services, but in a centralized way, and you practically take the best of both worlds. So yes, not your keys, not your coins. You give somebody access to, or you deposit your coins with somebody, but you get some benefits out of there. There is a customer support. There is somebody that can help you, and this is where the company falls into. The other things I shortly wanted to touch on, Joe already gave you guys a little bit of a rundown. What I wanted to talk about is, one thing is my personal secret tip of the most mispriced opportunity in the market currently. And in my opinion, this is, it is in the DeFi space, but most people, they think DeFi is only happening on Ethereum. And this is not true. There is several big opportunities when it comes to decentralized finance. You have, I would call it DeFi on Ethereum, and this is like 90% of the market right now. Everybody builds on Ethereum, everybody uses Ethereum, but there are some problems. Most of you, if you're in the space, you know about those problems. It's mainly very, very high fee and congestion on the network. There is also a few other things like smart contract risks and lots of rug pulls or things that are not working out very well. Big hacks. But there are other platforms, they build native DeFi. So they have their own blockchain that is not based on ERC20. They are much more interoperable with everything else. So I would classify this into 3 different categories. You have DeFi on ETH, you have native DeFi, so a blockchain that uses their own DeFi, and you have DeFi on Bitcoin or for Bitcoin. So projects that directly interoperate with Bitcoin. And at the moment, everybody's just looking at this one thing, DeFi on Ethereum, and they completely forget about the other 2. If you go a little bit deeper into this, like I can name a few projects that are looking at this without chilling, without me telling you should buy them, just maybe take a look at it. But it's like things like Torchain or Sovereign, DeFiChain, and they all try to be this intersection or interoperability between Bitcoin, Ethereum, DeFi, native DeFi. And I think, in my opinion, this can or will be a thing in the coming years. Maybe not right now. We have these hype cycles, they come and go in the general markets. We heard a lot about this today. Like right now, what is super hot is NFTs, and it is meme coins and dog coins. Like this is where everybody talks about, this is what everybody wants to buy, especially people that come into the space newly. But if you spend a little bit of time in the markets, these hype cycles, they come and go, and every 2 years or every year there's something new. Like last year in 2020, we had a DeFi summer. A few years before that, we had ICOs, we had and it moves a little bit in waves. With all of these waves, there comes so many projects with big fundamentals that actually build the real future. But if you play it well, you can like really take advantage of these hype cycles. And in my opinion, a few of these will come back, especially within the DeFi space, because you need to imagine 3.5 billion people on this world. So around half of the people, they don't have a bank account, and most of them don't have access to banking, real banking. So we're not just talking about sending transactions and receiving transactions. We're talking about maybe somebody in Nigeria wants to start a business and he needs to have a loan. He has some collateral, maybe he has some Bitcoin, maybe he has some ETH, but in a bank, they will never give you a loan for these kinds of things. So with real DeFi that actually works, you will be able to lock in your collateral and get a loan in USDC or in USDT, and you have the opportunity to have the best of both worlds. So you have price exposure into your collateral, into your Bitcoin, into your ETH, but you also get the USDC loan out of it to start up your business. So I think we have not seen like the full on DeFi catching on, especially I would say in the third world where people don't have easy access to the banking system. The other things I wanted to talk about is maybe a little bit of a general market point where we are right now. And it's very, very difficult to foresee what is happening into the future. And if you want to foresee what's happening in the future, you have to look at the past. And what is happening right now, we have 3 data points. So we have this 4-year cycles that Bitcoin moves in, and everybody kind of follows Bitcoin. So if Bitcoin goes up, everything goes up. If Bitcoin goes down, everything goes down. And Bitcoin moves in these long cycles, and it's called 4-year cycles because they're are connected with the Bitcoin halvenings that happen every 4 years. And right now we're in a late stage of the cycle, but there are many theories to it. And because we only have 3 data points, we kind of have to look at those data points. It's not a lot, but these data points, they say we're in the late stage of a cycle, and there are 2 big theories. One is called lengthening cycle theory. So every cycle gets a little bit longer than the last one. And this is just what we saw in the past. And it's also what we're seeing right now. So this cycle is already longer than the cycles we had before. And there's another theory that says it's called the diminishing returns theory. So every cycle will have a little bit less return than the one before. And it's also what we see right now. We have a little bit less returns than the cycle in 2013 and the cycle in 2017. But nobody can actually tell you where we are going. Like most likely, and just looking at the historic data, it's very likely that the top of this market cycle is going to be in 2022. Just a bigger chance if you look at the historic data and the math behind it. And also that probably the returns are a little bit less than we had in other cycles. If this is going to play out, nobody actually knows. It's also very much possible that we go into a very broad adoption phase where crypto is like getting into the minds of a lot of people, and we are not going to see these crazy parabolic run-ups with 80% corrections, that these growing cycles actually get a little bit leveled out over time. So we only have a little bit less returns in a run-up and lower or a little bit easier corrections, more in the scale of 50%, what we saw in May. At this point, like these are the general things that I shortly wanted to touch on. I think Jessica that spoke 2 slots before me did this really, really well, where she opened up the chat to everybody, so they could ask some questions in chat. And I'm seeing a question from Dennis right now. He asks how to recognize solid DeFi projects. There are so many now. Which of them are harder to hack? Very good question, Dennis. And I'm not going to give you names of DeFi projects to invest in this, but if you want to take a look at it, like me personally, and this is very individual, I always look at some track records. I don't want to invest in a coin that has no track record. I want to invest in a coin that is there for a while. I want to invest in a coin that has a great team behind them. Maybe people people that already did work on another project or have a nice resume. And also check out if these projects are actually audited. For example, CoinMarketCap is actually a great site. If you go on CoinMarketCap, you click on a coin, they actually list audit reports on the site. Take a look at those audits. Then you have sites like, for example, DeFi Pulse, where you have a list of all DeFi projects that are currently, it's a ranking where they rank projects in total value locked. So how much funds are actually locked within those projects. And then you can just go from the top down, take a few names there and do some research. Like always do your own research, and watching a YouTube video of somebody talking about a project is not doing research. Like really go into it. Best thing to start is, in my opinion, these sites where all these projects are listed, take out one and do a little bit of go on Reddit, join their Reddit community, look if there is, ask your questions there, Google the project, take a look at an audit, things like that. Then which site you mentioned about DeFi? A good one, they're very, very Ethereum focused. So they list almost exclusively Ethereum projects, but you can take a look at DeFi Pulse. It's, yeah, maybe somebody can link it in chat, but DeFi Pulse. I'm not actually sure. Let me check. DeFi Pulse. Yeah, it's DeFiPulse.com. It's a pretty good overview site where you can get a look and feel of different DeFi projects. Yeah, thanks for posting that. Do you think that Binance Smart Chain is a reasonable long-term solution to high fees? Yeah, like, okay, you need, there is, you have this blockchain trilemma, and where you have scalability, decentralization, and security. And a blockchain almost always is in one of two corners or two of the three, one of the three corners or two of the three corners. So they have their strong suits and they have points where they're a little bit weaker. So Binance is really, really good in scalability. So they have low fees and they manage to keep them low. So yeah, I guess when it comes to high fee, Binance Smart Chain is a really good solution. Yeah, for sure. There is, when it comes to Ethereum, because all these other platforms, and there's lots of flippening talk right now. So people are talking about, hey, maybe Binance Smart Chain flippening Ethereum, Solana flippening Ethereum. So flippening means overtaking another blockchain in ranking, in market cap ranking. And the Ethereum is super strong when it comes to developer community. Lots of people, everybody wants to be on Ethereum. Everybody wants to work on Ethereum. Everybody learns Solidity. So it's the language that you use to write applications. But there is one thing going on right now, and I would call this an open heart surgery on a living patient. So what they're doing is they want to move their consensus algorithm from proof of work to proof of stake. And this has never been done before. All the other proof of stake blockchains, they started with proof of stake. So and Ethereum wants to move over. And if they manage this, this is a great thing, but watch closely what is happening there, because they're postponing it and postponing it. That's not a bad thing because they take their time to actually do it right. But it's one of the most interesting things that is going on right now in the space, definitely. What do you think are the key challenges to reduce volatility in crypto going forward? Good question. Like, in my opinion, volatility is a feature, not a bug. It's good that we have this volatility because it attracts capital, it attracts a certain kind of people. And all we are doing with monetary policy in normal markets is we take out the volatility. So with all these money printing and stock buybacks that's happening in traditional markets, we suck out the volatility. So we don't give it room to have volatility. If it goes down, we print money and push it in. If it goes up, we try to keep the money out. So we flatten out the volatility. But the market needs to have volatility. So where does this volatility go? It goes into things like cryptocurrencies. And volatility attracts new people. All these hype cycles that we go up and down a lot, this is what attracts new people. And probably it attracted you as well. Like most of the people, they come for the gains and they stay for the revolution. So in my opinion, volatility is a feature, not a bug. But of course, with more and more capital entering into the market and the market growing bigger and bigger, the volatility will get less and less. But I think we still have a few years of volatility left. Everyone loves staking. Yeah, I agree. Staking is a really, really, let's call it safe way to earn some yield on your cryptocurrencies. There are so many projects that are proof of stake, and if you, yeah, sure. Cool, great question so far.
Okay.
Joe?
No, I was just going to say, because I was writing it, but it was too many words. One of the things that occurs to me about the volatility is that the difficulty in valuing projects. Today it's like it's just sentiment, and then sentiment goes away. There's really nothing to catch. You know, so if there was a way to value projects, you know, in a widely accepted way, do you think that would, because we're on this curve of adoption, do you think that's one of the keys to the adoption really taking off in this next decade? That's what I think. But what do you think about that idea?
Yeah. I guess we can already see volatility decreasing. Like if you really look at as 10 years, like the cycles we had in 2013 and the cycles we had in 2017, the volatility was a lot bigger than it is right now. And we also saw that, for example, in the May drawdown, it was actually not a big drawdown. It was drawdown of around 50%. And in crypto, 80% is not, it's very common to have 80% volatility on the downside and multiple like 10x, 100x. Maybe to like, if you compare the 2020 and 21 run up, we actually had so much, a lot less volatility than we had in 2017. And you can see this with lots of altcoins that existed in 2017, 2018, making a few examples, XLM, ADA, XRP, like a little bit of the top 20 coins, just to name a few. They actually had a lot less volatility than they had in 2017 right now. Maybe this is going to change, but I think volatility is slowly to starting coming down. And how to value a project within the cryptocurrency space, it's really, really tough because you can compare it a little bit to a venture capital investment. And venture capital is super difficult, even for people that do this full time and are like 100% in there. It's so difficult to value a project at the beginning stages. And good people within venture capital, they have, if you have 20% of your calls right, you're doing fantastic. And I guess in the cryptocurrency space, they're very similar. It's so difficult to value these projects and to really dig into it because there's so much hype and so much marketing out there. Everybody, of course, tells you that they are the best and they do fantastic work, but not everybody, of course, is doing that. And we have 16,000 coins, I think, right now, or more. It's so hard to get an overview and to really pick your winners. If I would have a recipe, I would be happy to share it with you. But for me, I see it very conservative. So I only invest in high market cap coins. I don't try to pick, like, for example, CoinMarketCap, they do a really, really good job with these top 200 listings. So they exclude coins where they think, I don't know yet, they're not listed on big exchanges, they don't have high trading volume. So if you go onto CoinMarketCap and you look at the top 200, it's better to stay in that range than to go outside of the range, or you have better chances. Let's say like that. Can you please share a link of the project you are involved in? Yes, of course. I'm gonna show. This one is Cake DeFi. This lending, staking, liquidity mining in a centralized way. And the other one I am actively contributing is DeFiChain, and the ticker symbol is $DFI. This is not, I own a little bit of that, I have to say, not sharing this. I'm just actively involved in the community as a moderator on Reddit and on Telegram and so. The other one, the first link I posted, this is actually the company I work for. And the link I posted you in chat, you get a little sign-up bonus when using that link. I'm coming at the end of my time. If you want to follow me, and I host a weekly podcast to give some updates. This is my Twitter. Like I host a weekly podcast where we talk about general markets, a little bit of the things I shared right now, where I'm last 2-3 weeks, I was actually pretty good with making some good calls. It's not always like that, but if you want to follow me on Twitter, feel free. I'm very, very active on Twitter. Fabio, as a community manager, how do you see the best practice in blockchain that makes a community thrive, and how do you see it evolve? Yeah, community management is pretty tough. I think Samuel mentioned this a little bit when he spoke, because people, they ask you a lot of questions, and the most questions I get is, do I need to buy this coin? Do I need to buy that coin? Is that safe? Is this safe? And just to give you my honest opinion about this, if you need to ask this question to somebody else, like a YouTuber, an influencer, or even me here on Zoom, then you should not base your investment on that. Investing is difficult. You need to take your time and really go and dig deep. Use Google, use Reddit, use CoinMarketCap, and don't put all your eggs in one basket. That's a little bit of a very general advice that I can give you. Yeah, it's really tough. Like, people don't have, let's say, their basic fundamentals of their house in order. So what I see a lot in community management in our Telegram groups and on social media is that people actually go into debt and overextend their credit cards to participate in the market. And this, you should never do this. So take care of your personal finance, have a little bit of a safety bucket in your local currency, just in case something happens in your personal life. And then, take a little bit of a conservative investment approach. But community management, it's tough. I ban and block a lot of people. Sometimes when my girlfriend asks me, what do you actually do at work? Then I say, I ban people and I block people. That's like most of my work, what I do all day, because there's just so many scams, so much spam, and no really good solution of doing something about it. Yeah, I think my time is almost coming to an end. I have time for one more question. Maybe Joe, you have something you want to add?
Well, so just thinking about how Cake DeFi works. It's like it's a company that then takes users' capital and you decide, like, pools of strategies. People can jump into pool 1, pool 2, pool 3, or is it just choose your own adventure type of thing, and in DeFi projects, but you sort of take a little bit as a company for doing the service.
Exactly. You summed it up quite nice. It's practically a big pool. So people drop their money in. We have the biggest partners in the space. So this is Genesis, this is Signum, this is Sparrow, and we are just an intermediary. So we pool the capital together and we give it to, like, the biggest partners in the space, the people that everybody else is also working with. You can also do this yourself if you're a whale, if you have big capital. And what we do is, our service is free of cost. Everything we do is we take 15% of your profits. So if we, let's say you earn a 10% yield, we take 15% of this. So you earn 8.5%. And we take 1.5. But all the fees, or all the APYs and APRs we list on our website are actually net. So the fee is already deducted. You never see the fee. What you see is what you get, practically. But yeah, that's the business model that my company earns money with. Is if you earn, we earn. If you don't earn, we don't earn. That's practically the way to put it nicely. Cool. I'm running a little bit out of time, but Joe, thank you very, very much for reaching out to me to give me the chance to share a little bit. For everybody else, if you want to connect, feel free. I'm like online 24/7. Also, if you want to connect on Telegram, maybe I'm going to list my Telegram. I'm very, very active on there, like 18 hours a day. Depends a little bit on time zone where you're in. I live in Europe, so thank you very, very much.
Thank you, Fabio. Yeah, and by the way, everyone, that's how I found Fabio, was on Twitter. He's doing a Twitter group chat with the Cake DeFi
Twitter Spaces,
giving predictions on the market. So
yeah. Thank you, Joe, and thanks,
right,
everybody. Binance is awesome, and you guys are as well.